Now, I just want to quickly put out on Market Laser a simple chart which puts into context the mid-cap rally that we've seen. I mean, the headlines in some papers generally overall has been that the mid-cap index has now joined the lifetime high club, right? And it's at an all-time high, which means, it could, it's at a very high level. But you've got to contextualize that in terms of earnings. Where are prices relative to earnings? And to be able to do that, the simplest way to do it is look at P multiples for the index as a whole. And that's actually exactly what I've done with the chart which is up on your screen. This is all Bloomberg numbers. 1 year forward P multiple for the mid-cap index is now 23.4 times. Right? I mean, now 20, anything 20 plus, I would kind of consider to be high. I mean, it's not, even relative to its history, it's not exactly cheap. But what I did is look at the previous two instances where the mid-cap index made significant highs. I mean, the last one was made in October of 2021 when the market peaked out, right? So October 21, market peaked out, and then for the next 17, 18 months, all the way till March of 2023, just drifted and actually lost a fair bit of value. The rally, only remember, started in April of 2023. In October 2021, as you can see, the mid-cap index P multiple was 33.5 times. The previous high, which was lower, substantially lower than this high, was 33.5 times. It was wildly expensive. We're at 23.4 times. You go back one more step, right, and look at the big peak of that time, which was, in 2018, January of 2018, when, again, the mid-cap and small-cap index, if you remember, there was that SEBI circular which came out. Before that, the stock mid-caps and small-caps had an absolute frenzied kind of move, and then they topped out that month. The P multiple was 24.3 times, higher than where we are now. The point is that looking at absolute values, yes, absolutely, it does give you a sense, and at a stock level, 100%. But I think if you want to get an aggregate picture of where prices are relative to earnings, I think the P multiple serves a useful picture. So you are actually far lower than the previous peak of 2021 and slightly lower than the peak that we saw in 2018 as well. So I just wanted to kind of contextualize that. And of course, the simplest, the explanation is that this is 1 year forward, earnings have moved up nicely, sharply, is looking good. Nishal was explaining that to us earlier. And forward earnings expectations from this part of the market is also pretty healthy. Nishal